Everyone. Welcome to Netcapital's live Q&A with Ryan Gee of Priva. Just as an outline of how this will go, I'll be asking some questions and emceeing, letting Ryan talk about Priva and what they're doing and why they're raising on Netcapital. This is a great chance for all investors to get a deeper look into what Priva is doing and why they're raising and what the opportunity is. If anyone has questions throughout the webinar, there's a Q&A feature. Feel free to ask questions, type them in there. I will kind of do my best to get to all the questions and ask everything and maybe combine questions if necessary. But otherwise, we'll get right into it. So Ryan, welcome.
Thanks, Rob.
Why don't you just start with tell me a little bit about yourself and tell me a little bit about Priva.
Sure. So good afternoon, everyone. As Rob mentioned, my name is Ryan Gee. I am the founder and COO at Priva. My background is in automotive, as is my co-founder Dagan's. We've both worked at car companies. I was at GM, he was at Chrysler. We served in the leadership team at an EV electrified vehicle startup, Rivian, and also worked for a time in management consulting at a firm considered a thought leader in the changes in the automotive and mobility landscape. And it was our work in this space that, coupled with our personal experiences of regional travel, that led us to the idea for Priva. Priva, to kind of dive into the company and what we're doing, Priva is an alternative to commuter flights. This would be a flight from New York to Boston, or in the Midwest, this is Chicago to Detroit. A flight that takes the same total travel time to take the cab to the airport through the TSA and then fly to your destination. You can essentially drive or fly in the same amount of time. And we kind of had this epiphany that the technologies and trends that are changing the way we move around our cities, particularly ride hailing through Uber and Lyft and all the conversations around autonomous vehicles that Waymo's putting on the road in Phoenix, those technologies weren't just going to change the way we move around our cities. They were going to impact the way we move around our regions. And the light bulb sort of went off for us saying, those will be able to replace commuter flights by providing a better user experience at a lower price point. And that's when we decided we want to found Priva and start building that service today in anticipation for this future. We call it DVDs by mail, kind of as a nod to Netflix. So it's not autonomous yet, but we operate a fleet of mobile offices. You can see some images of these pieces of equipment on our Netcapital page, but they're captain's chairs that face each other. There's Wi-Fi on board, and it's intended to replicate the in-vehicle experience that we believe will be the autonomous future with a business model that can make money today.
Great. And so, you talked a little bit about the team and your backgrounds. Talk to me about what the kind of today's experience looks like if I want to order a Priva.
Yeah, sure. So right now we do all of our ordering through our website and via email. So customers reach out and they give us, the date that they need a vehicle, the addresses, and then that all comes. We quote the price, and the vehicle shows up and takes passengers door to door. So a typical trip is, let's say, Detroit to Chicago. It's our most popular route at the moment. We pick up 2, 3, 4 business travelers either at their office or their individual homes, and we'll stitch together the most efficient pickup route. We drive them door to door, so they can just get in, plug in, get back to work. There's a partition to the driver, so they're welcome to have fully company confidential, client confidential conversation while on the road. Request stops as needed if they want a Starbucks or something on the way. And then they get dropped off to their destination. And we focus on routes between 150 to 300 miles. We think that's really the sweet spot for this business model because customers, it's the same amount of total travel time as to take that commuter flight. And our most loyal customers really view us as a productivity product masked as transportation. Like that's the thing that keeps them coming back. It's our customers are consultants, bankers, lawyers, corporate vice presidents, and it's the type of traveler that getting 4 to 8 hours of their week back from the commuter flight travel experience is exponentially valuable to them.
Great. And for example, for one of your more popular routes, like the Detroit to Chicago, how does the timing compare between a commuter flight and the Priva service?
Total travel time is about the same. So, and that's why we picked that sweet spot of 150 to 300 miles. So, and when we look at total travel time, we include things like for the flight, taking the cab to the airport, an hour early to clear TSA, planing, deplaning, takeoff. I mean, there's really no such thing as a 1 hour flight. And to drive, it's 280 miles, Chicago to Detroit. It's a 4.5 hour drive. And the thing that's interesting, and I know we'll get into the markets here a little bit, but there are a lot of city pairs in the United States alone that have similar geographic, layout. So Boston to New York's a good example. Down in Texas, Dallas, Austin, Houston, all of those pairs of cities are similarly spaced. Down in Florida, you've got Miami, Orlando. What we realized was, when I said the idea came from our personal travel, we were doing a lot of Chicago to Detroit. What sort of convinced us that it was an opportunity is when we actually went out and we looked at all the data and the city pairs and spoke to travelers, and the number of people that have a need for better regional transit solutions was pretty staggering.
Yeah, so you're getting into it, but talk to me a little bit more about how big this market is, how big you feel it is, how many travelers, how many different city pairs, things like that.
Sure. So we sized the market purely from a United States perspective. We didn't look at any European pairs or anything in Asia. The most heavily trafficked commuter flights in the United States comprise a $10 billion market of annual travel spend. But that's just sort of the tip of the iceberg. And those flights, by the way, are in pretty much every well-populated region of the country. Pacific Northwest, the Northeast corridor, the Midwest, Florida, the Southeast, like Atlanta to Charlotte, huge route through there, Texas. But then each one of those cities has many more commuter flights coming off of it outside of the 10 billion. So out of Chicago, this would be like a flight between Chicago and Peoria, where Caterpillar's headquartered, and like the traffic that goes back and forth on that route. Or out of Detroit to Toronto. Some of those routes also weren't in the data set. So we know it's bigger than 10 billion. But more interestingly to me is the fact that, according to the US Department of Transportation, over 75% of regional business travel, being defined as trips under 300 miles, 75% of those trips are currently taken by personal car. So we also know that the flights are just sort of the tip of the iceberg. And if we really think about, the trends in transportation moving away from vehicles that are personally owned and personally operated, if that trend continues to play out, as I fully believe that it will, there is going to need to be better regional transportation options available to those 75% of travelers. So 10 billion is the number we use because we can prove that it's spend, but we think it's a market that actually grows as transportation trends continue to shift the way they are.
Great. And talk to me about your business model. You have a big market you're tackling. I feel like you've got that fleshed out. Talk to me about how you plan to make money now and in the future.
Sure. So right now we do it all by chartered trips. So customers contact us, we provide a quote, and they charter the full vehicle for their team. So where our beachhead in terms of customers is groups of travelers that need to do these regional trips. Some of them are same day, but basically we provide the trip and do the invoicing. We are experimenting now, due to customer requests, on some subscription models where companies would buy blocks of time at a mildly discounted rate. I think that would be beneficial to us because it locks in contracted revenue, but it's still pretty early days. So everything we've done to date is on a charter trip model, but we're just starting to move towards subscription and recurring revenue models as well.
Great. And do you see those subscription and recurring revenue models as the future, or is it still, are you still being flexible?
I think that we're going to end up with a blend. I mean, if you look at like, for example, I know that the airlines like United and the rest, they have B2B contacts and contracts, like McKinsey and Company buys block of miles and stuff from United, and they have preferential treatment. I think we will have our anchor customers in B2B and then continue to offer a la carte chartered trips as availability allows. So we will be at a blended model, but our focus is really on the B2B relationships, because I kind of think about it like real estate, right? Like we want to find our anchor tenant as we're scaling this out. So who is that going to be? We've got some good leads there, but that's the way I see our model really evolving beyond where we are right now.
Great. And we have our first question from participant. So can you talk about your experience and success to date on the marketing and sales side? Do you do digital advertising, direct or indirect marketing through travel agencies? And what are the margin contributions for each of those?
So this is a great question. All of our marketing to date has been through word of mouth and earned media. So we got picked up by Forbes in September of last year. A contributor wrote a piece on us, and that drove some business. And then most of our customers we started just to say like, hey, I want to validate that we have a user experience that people want to share. That was really the focus. So we put 2 vehicles on the road. The word of mouth alone kept us busy enough that we did not explore additional sales and marketing. So to go specifically to your question, we don't do digital advertising yet. We don't leverage, paid media or any of the other avenues that are available. That I view as the next step in building out the business, is figuring out, what does that marketing funnel look like to walk somebody from the public to brand awareness, to their first ride, to a repeat ride, and then maybe to a subscription. So like, how does that all work, and what are the right tactics and marketing tactics? We're 7 months old. So I mean, there's still lots of challenges that we're figuring out, and the marketing questions, we just don't know yet, because the word of mouth has kept us so busy.
Great. Speaking of that, being 7 months old, talk to me about your progress so far. We have an attendee asking, what's the size of your fleet, and where is it geographically located, and kind of what do the next 12 to 18 months look like, both in terms of fleet size and geography?
Sure. So this is good context. So we're 7 months old. We were formed in the summer of 2018 in July. And I view our corporate history as kind of like 3 chapters. So chapter 1, we went through a startup accelerator called Techstars Mobility out of Detroit.
We can get into that more later.
Sure. Yeah. So it was a 3-month program. We just formed the company. And that's when we were getting everything set up. So initial contracts, corporate formation, bank accounts, like all that stuff sort of took some time. Then we launched. Chapter 2 is like the in-market beta. So before worrying about scaling the fleet size and figuring out marketing, we said, let me prove that we have an experience that people want. So we got 2 mobile offices. So our fleet size is 2 mobile offices right now. And we ran our in-market beta out of Chicago and Detroit. We did that from August through December. Over that time, we did 70 paid trips, served over 150 customers, and generated, $25,000 in revenue. But what we were really focused on, it wasn't about the revenue figure as much as it was about what was the experience we were delivering, and like, was this experience better than flying? And A, is it better than flying? And B, are customers willing to pay a price point that allows us to build this business today without autonomous tech? Because a lot of people in the auto industry, from my background, they look at these models, they think that this is possible, but they make the assumption that you can't do it yet until like autonomy is available. And what we really learned over 3-4 months of operating is, no, you can do it. You can do it now. There's a model to do it now. And so from the success of that, we move into chapter 3, which was we're doing our first fundraise. We're in the process of that. We brought on a lead investor, seed stage investor out of the Midwest, Invest Detroit Ventures in Detroit. We're raising on Netcapital. And I'm continuing to fly around and meet with angel investors. So I'm like in New York today, just like working out of a WeWork. So
yeah, do you have a general plan of what the next 12 to 18 months look like in terms of fleet size and geography?
Yeah, thank you. Thanks for bringing that back.
No problem.
So geography. So we're going to continue to double down on the Midwest. We're going to grow the fleet size. We'll focus on Chicago, Detroit. We're building a little bit of a cult following out of Indianapolis, which is interesting. But the reason for that is twofold. Maintaining that tight geographic focus really allows us to fill a lot of return legs. I mean, to some extent, we want to run this as a network model like the airlines, so we need a certain amount of network density. So we won't be going to places like Texas or the Southeast or the Northeast yet, even though we believe that there's some very attractive routes there. We want to prove it in the Midwest. And then so why the Midwest? When we looked at the data, it's one of the regions that has the most monopolistically priced airfare. Like for example, a flight from Detroit to Pittsburgh, which is fairly common these days, given Pittsburgh's presence of Carnegie Mellon, Uber's there, and the interaction between mobility and the classic automotive industry. That flight is, on average, is like $650 per person. So there's some pretty outrageous flight prices in the Midwest, which makes it actually a really fertile market for us to build out the service and prove it. And then in terms of fleet size itself, I would love to get to 10 to 15 vehicles. And we're working, so just so we are also clear on how that fits in with the capital raise, we're working with a number of equipment leasing companies that are interested in helping underwrite the physical equipment. So all of our current raise is going for branding, advertising, and some improvements in technology. Because we have the debt piece that's helping debt through leasing, it's effectively debt, underwrite the assets.
Great. And we have another question from an attendee. Can you talk a little bit about the competition other than traditional air, bus, train?
Yeah, of course. So there's some interesting regional transit plays that are emerging. None of them are exactly like what we're doing, but I think it's just cool to know that there's other innovation trying to happen in this space. So the first I'd point to is a number of luxury busing companies that are emerging. So the most successful of which is called Von Lane, and they're running down in Texas. They run, 30 seats on a bus connecting Dallas, Houston, Austin, and they just added a route to San Antonio. They're not door-to-door like us. They don't provide you the privacy, but if you're just a single business traveler who just needs some laptop time, they're a good, fairly affordable option, $100 a ticket to do that trip. There's a night busing service that's running between San Francisco and Los Angeles called Cabin, and their website's Ride Cabin. I think that that's a cool model. It's a longer distance than what Priva would serve because we're focused on something that's shorter, like 3 to 4 hours. That's not really quite an overnight trip the way that like SF to LA can be. And then I often get asked about traditional players, like why can't you use like an Uber or a Lyft to do this? And there are some challenge, like technically you can. Talking to customers that have done that, though, there are some challenges with that user experience in terms of finding drivers that are willing to drive that distance and no quality guarantee in terms of the type of vehicle that you're going to receive. So for our clientele, consistency is like the most important thing. They know that they're going to get a mobile office, that they can get that productive time. They don't want to ride in the back of a Prius for 300 miles.
Yeah, that makes sense. So you mentioned it briefly, but I'd like to bring it back to, you talked a little bit about Techstars. For those who don't know, can you talk a little bit about what Techstars is, what you did there, and kind of why it's relevant to you as a company, and why it may be relevant, why it may be information that investors are going to want to understand?
Sure. So Techstars is a startup accelerator. It's one of the leading startup accelerators worldwide. And the program we went through was the mobility program in Detroit. And so it's a mentorship driven accelerator connecting us and our team to a number of corporate sponsors, players in the automotive and mobility space, like Ford and Bosch, really helped build us out a highly relevant industry Rolodex beyond what we'd already developed through our time in consulting and just in the industry, which provided us the opportunity to, bounce our ideas off people, validate the thinking, hear, 300, 400 perspectives on our business. So I feel like we know what the challenges are going to be, and there's no perfect way to approach it. But I feel like at this point, we've heard everything that could possibly, the pros and the cons of almost any approach. I think the next thing is there's a whole network of founders, entrepreneurs, and investors that are tied in through Techstars. So talking to startups that are a couple steps further along than us has really helped accelerate our ability to build a company the right way, because we can learn from the companies that have come before us. And there's like a network through Techstars that we can always ask questions. So even though it was only a 3-month experience, they kind of say Techstars is for life. And the last thing I should mention is getting into Techstars was really my co-founder and I's impetus to pursue this full time. We felt like we had an idea, we had been testing it and prototyping it on our own, but Techstars accepts less than 1% of the companies that they see. And so when Ted, the MD from Techstars Mobility, said like, hey, this is a novel idea that I haven't encountered yet, and I think you guys are really onto something, that to us felt like really strong validation that we decided to, put all our chips on the table and go full time and leave our jobs.
Great. And you also announced recently an investment from Invest Detroit Ventures. Could you just talk a little bit about kind of what that was and how they maybe made the decision?
Sure. So Invest Detroit Ventures is a seed stage venture arm in the Midwest. They have the two MDs there, the managing directors, have over 20 years of startup and investing experience. So we met them at the end of Techstars. They ran about a 1.5-month long process of diligence on our financial model, our market opportunity, our 12-month plan. They took it to their investment committee, and they really liked what we were doing. I mean, they're Midwesterners, and they've traveled some of the exact routes that we're trying to serve, and they understand that particularly in that region of the country and other regions, there aren't great options. Like, we don't have an Acela connecting Chicago and Detroit. And being tied into the mobility ecosystem in Detroit, they really believed, the future that we were pitching and what we were building there. So they came on board in December with an investment. Their investment committee approved it. They're putting $150,000 into the company. And they're continuing to support us with their own relationships and networks. So we've got the Techstars network, we've got the Invest Detroit network. Invest Detroit's done 110 investments in early stage companies to date. So I just feel like we're getting investment and support along the way. And actually, one of the MDs there also runs an angel fund. He's setting up a new angel fund. So we're going to go pitch there at the end of Feb, which is also really great. So that's the Invest Detroit team. You can read more on them at investdetroit.vc if you're interested.
Great. And as we get towards the close, I want to kind of look towards the future a little bit. You talked about it a little bit, and you brought autonomy in earlier in the Q&A. But can you talk a little bit about what kind of technology changes as we move towards autonomy, and how that's going to affect your business, and what you think you can either take advantage of it, or what do you see that how do you see that affecting your business?
Yeah. So to me, autonomy is like this. It's cool. Some people are like, suspicious if it'll happen or if it won't, which is like, so to be clear, we're building a business that works today without autonomy. Autonomy turbocharges the business because from a operating cost perspective, there are really only three things that matter. It's the vehicle depreciation itself, it's the driver in the driver's seat, and then it's the fuel. And everything else, like Wi-Fi, TV screens, complimentary snacks, insurance, all of those costs are like essentially irrelevant. You can make them as nice or as skimpy as you want. The big three are the vehicle, the driver, and so with the driver being the number 2 cost driver to the system, autonomous tech's ability to replace that, and particularly in our use case where autonomy is most advanced, is like very steady highway use cases. That's going to come. So I mean, like autonomous trucking is already emerging because the highway use case is easier than the inner city stuff. You take that piece out of the cost structure and it lowers your cost. The other thing I'd note is there are other technology trends that are lowering the cost to operate this business. So swapping a diesel engine for electrified vehicles also lowers the cost structure. So there are a number of automotive technology trends that are pushing, that are enablers for lowering the cost of this service to then be able to approach a more mass market.
So we have another question from an attendee. They asked, assuming the Netcapital raise is fully subscribed, when would you anticipate subsequent equity financing, and in what range of dollars?
So when we close on $500,000, that will give us 12 to 16 months of runway. Our goals during that time are to get better answers around customer acquisition, marketing, branding, and to upgrade the tech. At that point, we would be going for a larger seed raise, I would say in the $2 to $3 million range. And that would then support growth to markets beyond the Midwest. And so that would be the goal in 12 to 15 months after that, after closing on the Netcapital raise, $2 to $3 million seed.
Great. And a final question from me, without getting too speculative, what do you see as potential exit opportunities for the business?
Yeah, okay. So for me, I think that we're looking at it. My co-founder and I went into this with the expectation that the exits via acquisition. I think that if you look at the numbers, IPOs for startups are statistically already unlikely, but given the appetite that we have seen from traditional players to move into providing services, transportation services, we think acquisition is very likely. And when I say traditional players, I'm talking about rental car companies, even some automotive suppliers. Like Bosch acquired a company named Split, which was doing ride share services and tech. Ford, I know they just shut the Chariot unit down a couple weeks ago. In my opinion, that has more to do with slowing down of the car sales. But Ford acquired Chariot out of San Francisco, which is a Y Combinator startup, for $63 million after they'd raised only $2 million, because these traditional players see that there's a lifespan, if you will, on their traditional business model of selling an asset and letting the owner operate that asset. And consumer sentiments are shifting to wanting to buy transportation as a service, not necessarily buy an asset and then provide their own transportation. And so they are exploring models that allow them to be services providers in addition to classical manufacturers. So I think that's the likely exit scenario for us.
Great. Well, that's all the questions I have on my end. If any attendees have any final questions they'd like to sneak in real quick, please type them up now. Ryan, do you have any kind of parting thoughts for our attendees and anyone who might watch this in the future?
catch me flat-footed here.
It's a pretty broad and open question.
No, I think we hit on most of the key points, Rob. I would just reiterate that we're building a business based off of our professional expertise in the space. We're confident in where the technology is going from having participated through programs like Techstars and our own backgrounds at Roland Berger and working directly in vehicle electrification and in the future of transportation. We built this because we saw a new market opportunity in regional transit to apply these technologies in a way that we didn't see anyone else really talking about, because everybody seems super focused on the urban pod. And by launching them today, I mean, there's a lot of work to be done in commercializing a service beyond just creating the technology that underpins it. And by commercializing, doing the customer acquisition, the branding, the experience, it becomes this platform to deploy these technologies, which we think is what drives a lot of value and makes us a potential acquisition target for the traditional players that are looking to move into services away from just manufacturing. So that's the thesis, and it's going well so far. Our customers enjoy the experience, and we need capital to scale up. So
great. And we did get one last question here. I think you covered it a little earlier, but we should cover it again anyway. The question is, what cities do you see this launching in? You want to just briefly reiterate where you see the expansion going?
Yeah, so it's all time frame dependent. So 2019, we're going to stay in the Midwest. This means we'll be serving trips out of Detroit, out of Chicago, Indianapolis, Cleveland, Cincinnati, Columbus. Beyond 2019, when we start looking at other regions, there are a number that are attractive. The Southeast US, so Atlanta, Charlotte, Raleigh, Durham, down in there. It's just a matter of how we sequence out the expansion. So there's a ton in Texas, there's a ton in the Northeast, New York, Philly, New York, Boston, New York, DC. But our focus for the next 12 months is going to be the Midwest.
Great. Well, Ryan, thanks for participating. Thanks for letting us dive into your business a little bit. For everyone who attended, thanks for taking the time. This video will be posted in the future on netcapital.com. If any of you are interested or have additional questions later on, you can find Priva on Netcapital at netcapital.com/companies/Priva. And you can find all the information you need about their site or about their company there. And if you have additional questions, there's a discussion board and you can ask Ryan anything else you'd like. And with that, thanks again, Ryan, and we'll talk to you soon.
Thanks, Rob.
Bye, everybody.